Hey traders, Nick Shaheen here. Wanted to look at coals, not so much from the perspective of what the stock is going to do or how to go forward from here with the stock itself, but it's rather looking at the price action, and it could happen in any ticker. It just so happened I picked coals as I was cleaning up my charts. Okay, so a while back I drew whatever I drew over time, and this giant red arc and then another tiny smaller red arc. So let me mark them up so we can speak to it. They look like a cup and a handle. So you've heard that term before, cup and handle. I'm not a technical analyst. I have friends that are, and they are great at what they do. I'm more of a broad brush, using some of the skills they have to perfection to suit my needs. And right here, there was an opportunity. There were tinier opportunities, like here it was pretty tight and I knew the move was coming. So if I was long, I would protect it. If I was short, I would definitely consider it closing. Fell down, came up, and I said, okay, here, there's another opportunity. These are the white lines, which brought us to this big guy. This is a weekly chart, by the way. So every candle is 1 week. It's not a fast-moving chart. And I said the upside target would be somewhere around here. Now, a technical analyst would have said the upside target is much bigger. Technically speaking, that may prove to be true over the long term. But for me, the immediate first target is I look left and see where it stopped last time, or where I can find a significant stopover point. This was it. So if I was long, I would have trimmed somewhere here. And, you know, not to speak that I'm perfect that way, but I usually close too soon. So I leave money on the table, and that's okay with me. Over the long term, that plays out fine. So if I didn't trim here, now I give them all back. So the worst thing I could do is don't trim, falls back down here and say, you know what, dang it, I missed it, and I leave. That's double the mistake. One is I didn't trim. Two, I got out of the wrong place. The place to get out is not here. It's somewhere down here, because this is normal price action. You break out, and then you come back to revisit the neckline most often from where you broke out. You want to test it for footing. Is it going to be solid footing for you to go like this again? Maybe attack this level eventually. So the mistake I avoid doing is A, not seeing the breakout, and B, if I'm on it, then where to get out? I get out at the first place I said it could go. That's my first exit point. So if I wanted to leave runners with house money, that's fine. But the worst thing I could do is not get out and then see this happen, then get out here. So knowing levels keeps me in the trade somewhere around here, okay? Because then I know if it falls below the neckline, then the likelihood that the bulls really emptied their tank on this move higher. Now, there are probably a dozen other patterns that people that are really good at seeing patterns can see, but this is just the basic price action that I see repeating over and over and over again. So A, know when the breakout happens, where your first target zone. For me, this was it. I drew it. I represented it with this red stick. Once it got near it, boom, I would be out. And then if I didn't get out, where do I bail? Not here. I mean, if I bailed here, that's fine. But if I waited all the way down to here and I say, oh gosh, dang it, now I'm back to even, I don't bail here. I will take some red to see if they're going to spring off of this. And it's not a hard line in the sand. Think of it as a rubber band. They could overshoot a little bit. Okay, so this was it. That's the only point I'm making here. Now, this is coals. I don't particularly like retail, but if you track the fundamentals and you know, then you will add the fundamental trade on top of the chart. Nick signing off. If you need to reach me, it's sellspreads@gmail.com. sellspreads@gmail.com.